Today, Bitcoin caps off its third straight month of gains. Senator Elizabeth Warren tells CNBC she wants banking to be boring again following the collapse of crypto-friendly banks. And we take a look at how startups are using blockchain technology to speed up construction around the globe. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices in the green on the last day of March after the Fed's favorite inflation gauge rose by 1/3% in February, which was less than expected. By noon Eastern, Bitcoin rose to $28,500. Ether climbed back above the $1,800 level, and Solana rose slightly. To go with today's gains, Bitcoin and Ether are in the green for the week, both rising about 3%. Today is also the last day of March, and it's been a big month for Bitcoin. That cryptocurrency rallied 20% in the past 30 days. It's on pace to end the quarter up more than 70%. Okay, moving on to today's top stories. First up, Senator Elizabeth Warren took to CNBC's Squawk on the Street this morning to stress that she wants banking to be boring again. Those comments, of course, come after the failures of two banks which serviced many startups and crypto companies. The longtime critic of the financial industry also emphasized that people and businesses should always be able to count on banks being accessible. During a hearing this week, Warren pressed the nation's top banking regulators on how Silicon Valley Bank and Signature were able to fail practically overnight. Financial regulators closed the two banks earlier this month, citing systematic contagion fears after negative news triggered bank runs. In the week since their collapse, Warren has authored or sponsored 3 new bills related to bank oversight.
You kind of look at everything that broke here. It's also that we permitted the regulators to take their eye off the ball. Banking is a regulated industry for a reason, because of its impact on the rest of the economy. We need the regulators right now, just as Joe Biden said yesterday. They need to start tightening those regulations down right now.
Treasury Secretary Janet Yellen said yesterday that the Biden administration is continuing to study the potential for systemic risks from digital assets, an effort that started before the collapse of FTX. Next, Do Kwon, the co-founder of Terraform Labs, was indicted in the U.S. following his arrest in Montenegro. In an 8-count indictment made public in the U.S. District Court in Manhattan, Kwon was hit with 2 counts, each of securities, commodities, and wire fraud, as well as conspiracy. The criminal case follows related SEC civil charges against Kwon and Terraform last month. Kwon is a South Korean national, and officials there issued a warrant for Kwon's arrest back in September. But up until last week, his location was unknown. That is, until he was reportedly arrested trying to fly to Dubai using falsified travel documents. We told you yesterday that both the U.S. and South Korea are seeking extradition of Do Kwon. That's according to Marko Kovac, the Justice Minister of Montenegro. He said that Kwon would be extradited only after a trial and any sentence served in Montenegro. Finally, today, a deputy governor of the Central Bank of China says that the region will beef up its regulatory oversight of the digital economy, as new technologies, especially new forms of finance, should not be blindly accepted and recognized. He argued at an annual conference in Hainan province today that digital currencies and newly invented cryptocurrencies can create new challenges instead of solving problems in finance. However, the deputy governor didn't lay out specific steps to amp up oversight. He stressed that cyclical swings in the sector, microcredit risks, and liquidity risk mismatches still exist. Back in 2021, China's regulators banned crypto trading and mining amid concerns that speculation could disrupt the country's economic and financial order. The central bank official argued today that crypto presents heightened risks tied to fraud and illegal transactions. All right, on to our main story. The crypto industry has faced a wave of criticism after the demise of FTX and the fall from the high prices back in 2021. Now more than ever, developers of blockchain businesses have to prove themselves and, importantly, show real use cases that can grow beyond simply trading cryptocurrencies. So Crypto World's Jordan Smith traveled down to Miami to explore one of these real-world use cases and hear how a startup is hoping to revolutionize the construction industry through blockchain technology.
At the end of the day, what we want to do is improve projects and project outcomes for our customers. So blockchain is really just a technology that allows us to do that.
This is the co-founder of DigiBuild, Robert Salvador, and he's trying to bridge the gap between construction and blockchain. On the surface, it might not seem like crypto and blockchain have much in common with construction, but both industries faced a reckoning in recent years. Crypto weathered a crisis in confidence and a crash in trading volume, while construction has been riddled with insane demand. The COVID-19 pandemic upended the construction industry. Record-breaking demand, sky-high prices, and huge wait times for materials meant chaos for the industry. An end of 2022 report from CBRE found that construction costs rose by 14.1% in just 12 months. The historical average is more like 2 to 4%. Research firm Enplan found that construction project delays doubled in the pandemic, with 1 in 4 projects delayed by more than 250 days. 1 in 10 were delayed by a year. But some are turning to the blockchain to manage that chaos. For example, Aquilina, a huge property development in Sunny Isles Beach, Florida. Now, Aquilina has several properties along Collins Avenue, but this is its latest. It's the North Tower at the Estates at Aquilina.
We were fortunate in that this adjoins the Aquilina, the first Aquilina project that we did, which was the hotel and condominiums.
It's a massive project with ultra-luxe amenities for the super wealthy. World-class restaurants, a state-of-the-art fitness center, even a nightclub in the basement. Not to mention beachfront high-rise properties worth millions. In short, no expense was spared to build a place where residents would never have to leave.
We look to appeal to families, either parents, grandparents, who anticipate that their grandchildren will be there. So, this is a big focus of ours. We have a simple definition of a successful project, and that is happy customers. And that's our total focus. So that's what we go after, and we do whatever it takes to get to happy customers.
But to build a project like this takes a massive amount of coordination between contractors and suppliers for what can be sometimes rare and exclusive products. And that's where we start to bring the blockchain back into this conversation. Construction-focused blockchain firms like Brick and DigiBuild are using smart contracts to streamline some of the biggest pain points in construction, supply chain management, and payments. Here at Aquilina, they're using DigiBuild. Robert Salvador is the son of a subcontractor, and through watching his father and his own construction business, he saw an opportunity to use the blockchain to build trust and efficiency.
A lot of the workflows in construction happen between companies that really don't trust one another. They're separate entities. So you've got general contractors, you've got real estate developers, suppliers, subcontractors, all these different parties involved in a construction project. And because they're separate entities, they spend a lot of time, money, and effort trying to build trust between one another, send that paperwork back and forth. So blockchain is a technology that is useful when you have all those parties that don't trust one another like you do in construction.
This idea caught the attention of IBM back in 2019, which brought the company out to its headquarters to figure out just how to get the construction industry on board with this new technology.
So in October 2019, we partnered with them. We built out this huge network of construction people and brought them together at a summit in San Francisco. So it was Innovation Summit. And from that, we sat down for 2.5 days and said, hey, what's next in the industry? What's most needed? So we had our ideas about it, but really what came out of there at the top of the list was supply chain. It was broken.
Since then, the company also caught the attention of startup accelerator Y Combinator and brought in big-name clients nationwide. And unlike other use cases for blockchain and crypto, customers don't have to have any knowledge of blockchain. The goal is that it just works.
We go in telling them the benefits to them and their everyday business. We don't really go in talking about blockchain. The same way when you send an email, I don't ask you what server are you using, or are you using the TCP protocol. You kind of just get an email, and whatever that use case is, you use it.
DigiBuild handles the coordination between suppliers and contractors.
We literally take a process where you might have 2 or 3 people dedicated to doing nothing but doing orders, tracking those orders, making sure it gets to the job site on time. We take all of that away from you. Software does all of it, but if a phone call needs to be made, either to a supplier or even just to the customer, say, hey, everything's, going great, 24/7, they can get into the software and they can look at it and know where their product's at in the process. They can request that we make calls. So it's this we're almost an extension of their team.
There is a cost to this kind of support, though. Blockchains can be expensive to launch, at least right now. You also have to have customers and partners to adopt the technology. One of DigiBuild's partners, IBM, and shipping giant Maersk launched a blockchain logistics project dubbed TradeLens back in 2018. It promised to streamline shipping by linking partners worldwide, but by the end of 2022, the companies wound down the project as it failed to reach a critical mass of users. More broadly, cryptocurrencies themselves are still facing renewed skepticism. and developers have to differentiate between troubled crypto businesses or projects and blockchain technology as a whole. Still, Robert sees a slew of new uses for blockchain and construction cropping up in 2023.
There's so many things we can do to fix and make more efficient the supply chain. The things we're doing now are really just scratching the surface. There's so many more things just in supply chain, but long term, we want these entire construction projects to have a digital foundation of blockchain because you can save so much more money. It unlocks new user behaviors. When Uber first started, technology unlocked a new user behavior. It used to be crazy to get into a car with a stranger. It wasn't safe, right? But when the internet came along and you had GPS location and credit scores, now it became okay to get into a car with a stranger. You can do the same thing in construction with blockchain. Unlock new user behaviors that will benefit the industry at scale.
Okay, that's all for Crypto World today, but we'll be back again next week. We'll see you then.